Hello students, I'm Dr. Anita Pandey from Sri Shankaracharya Mahavidyalaya Jinwani Bhilai, and today I'm going to take a lecture on a very interesting topic, that is goods and services tax, very commonly known as GST. So let's begin. So goods and services tax has been defined under Article 366 sub-Article 12A of the Constitution of India as a tax on supply of goods or services or both, except tax on supply of alcoholic liquor for human consumption. So this definition is quite simple and apparent, that goods and service GST is levied on supply, and the key word here is supply. This word supply has been defined in the CGST, Central Goods and Services Tax Act 2017, and only those transactions which come under the purview of supply of either goods or services are leviable to GST, except for supply of alcoholic liquor for human consumption. Article 246A of the Constitution and not Article 246 provides authority of law. So every tax, be it direct tax, indirect tax, any kind of tax, is levied only through an authority of law. That is, the law or the Constitution of India has provided that these taxes will be levied only through authority of law. And for GST, this authority of law has been provided by Article 246A. Now, why I have highlighted this, that the article which provides authority of law for GST is Article 246A and not Article 246. The reason for this is, for levying GST, the Constitution of India was amended through 101st Amendment, and through this amendment GST was levied, and this Article 246A was added to the Constitution of India for levy of GST. Now, why was this done? Why could not GST have been levied through earlier article or the provision in the Constitution of India? The reason for this is, till now any tax, either direct or indirect, for levying them, this Article 246 has provided the authority of law. But since GST has a dual system, by dual system I mean that when you go and purchase something and you see that yes, GST has been charged, so you must have noticed that CGST, if it is an intrastate supply, then it is CGST or SGST has been charged, or IGST has been charged. So dual GST system means that both central government and state government simultaneously charge GST. Now, in case of direct tax, only central government charges GST. In case of direct tax, only central government charges income tax. In case of say in earlier tax system, there was a state VAT, in which case that the tax or revenue generated from levy of that state VAT used to go to only state government. Similarly, service tax was levied by the central government, right? So in earlier tax system, under indirect tax, there were various taxes. There was a bifurcation in tax. Some taxes were levied by central government, some taxes were levied by state government. But now for GST, both these governments, central government and state government, have come together and they simultaneously levy GST on any product or service. That is why this amendment in Constitution was required and Article 246A was introduced. Now, let us learn something about these features of the GST, which are quite broad. So, GST is a tax on supply of goods or services or both. Now, you'll understand why I emphasized the word supply earlier in the definition of GST. So, GST, the word supply has been defined in Section 7 of CGST Act, and the taxable event, that is taxable event means the event or the incident which triggers GST, which attracts levy or levy of GST. So that is, what is that? That is supply, which has been defined under Section 7 of CGST Act 2017. GST is an indirect tax. Now, GST taxes goods and or services and not the taxpayer directly, which means that is the basic difference between direct tax and indirect taxes. In case of direct tax, which is income tax in our country, wealth tax, there was earlier wealth tax. So In case of direct tax, the tax is levied directly on the taxpayer. That is, the amount is told that yes, you have to pay XYZ amount, and the taxpayer directly pays that amount to the government. Whereas in case of indirect tax, the tax is levied on goods and or services, that it is levied by manufacturers or your traders, but the incidence or the burden of this tax, this indirect tax, falls ultimately on the consumer, on the final consumer, right? So that is why GST is an indirect tax, because it is levied on goods and services, and when the consumer pays the amount for purchasing that good or service, then that amount is inclusive of GST, and then ultimately that trader or the seller pays GST, the amount of GST to the government, right? So hence it is an indirect tax. GST is also a consumption tax. Consumption tax means in economic terms that tax is ultimately borne by consumers and not by suppliers. Again, as I explained you, GST is a value added tax. GST is it is called value added tax because GST is levied at all stages, right from manufacturer up to the final consumption, with credit of taxes paid on previous stages available as set off. Now suppose a manufacturer of say a battery, right? Suppose a manufacturer of a battery has sold that battery to the manufacturer of a torch maker, of a flashlight or torch maker, right? Now the manufacturer of battery will avail its ITC, input tax credit, that is the GST that it paid in production of that battery, right? And it will charge GST on the sale of that battery from the manufacturer of torch or flashlight, right? Now when this manufacturer of torch manufactures a torch and then uses that battery in the torch, then when it avails or he avails his input tax credit, then he will also avail the ITC that he paid on purchase of battery and other components that he used in the production or manufacture of torch. Similarly, this is what is explained here, that GST is levied at all stages. Like in the GST was levied by the manufacturer of battery, GST was levied again by the manufacturer of torch, right? And ultimately what happens is, these manufacturers or traders or wholesalers who fall in between that supply chain till the final consumer, till the product reaches final consumer, they all pay GST to their predecessor. They avail input tax credit. Ultimately in all stages, like GST is levied according to HSN code in case of products and SAC in case of services. So what happens is, GST HSN code for this battery, in our example battery, is different than GST HSN code for torch, and these HSN code decide the rate of GST, right? So it may happen that, suppose in case of GST on this battery, the rate charge was 18%, but in case of torch the rate charge is 28%, right? So the rate gradually adds up, and these producers and retailers and wholesalers, they avail their GST, and finally it is borne by our final consumers. And at every stage when a new value is added, like from battery, torch was then it became used in a torch, right? So in every stage value addition happens, and GST is levied on that value addition, because at previous stage this ITC has been availed. So GST is a destination based tax. Destination based tax is a tax that would accrue to the taxing authority which has jurisdiction over the place of consumption, which is also termed as the place of supply. Suppose a manufacturer or a dealer has sent some goods, has sold goods from Delhi, that manufacturer or dealer is in Delhi, to a purchaser in Chhattisgarh. So that product will be sent or parceled from Delhi, and when and it will reach here, Chhattisgarh. and GST will be charged because the destination, because GST is a destination based tax and it accrues only to the taxing authority which has jurisdiction over the place of consumption. So IGST will be charged because Delhi is a different state and this is a case of interstate supply, right? So IGST will be charged in Chhattisgarh. Being a consumption tax, tax revenue arising out of GST shall belong to the destination territory. Now this is CGST, SGST, UTGST and IGST. So when in case of intrastate supply, CGST and SGST is levied, or if the supply has taken place in a union territory other than Puducherry and Delhi, union territory goods and services tax is levied, right? And then in case of interstate supply, like we discussed in our example of dealers sending goods from Delhi to the purchaser in Chhattisgarh, IGST will be levied because this is a case of interstate supply, that is supply or a transaction between seller and buyer of two different states. Now let us learn something about those taxes which have been subsumed by GST. Subsumed means absorbed or taken under, right? So these are the taxes. In central tax, central excise duty has been eradicated. Duty of excise in medicinal and toilet preparations has been eradicated. That is subsumed by GST. Now in place of these taxes, GST is levied. Additional duties of excise on goods of special importance has been subsumed in GST. Additional duties of excise, textile and textile products. Customs duty, additional duties of customs, commonly known as CVD, that is countervailing duty. Customs duty, special additional duty of customs, that is SAD. Service tax, central surcharge and cesses related to supply of goods and/or services. Now in case of state, the taxes that were levied by state, those that have been subsumed by GST are state VAT, central sales tax, luxury tax, entry tax of all forms, entertainment and amusement tax except when levied by local bodies like municipal corporations, tax on advertisement, purchase tax, taxes on lottery, betting and gambling, etc. And of course then there is any surcharge and cesses other than those related to only those related to supply of goods and/or services. Now let's understand about deficiencies of whole taxation system, because obviously there must have been some deficiencies, some lacunae due to which need for GST arose. If the system would have been perfect, nobody would have implemented, would have used that much of mind and so much of hard work and toil in overhauling a perfect system. Nobody does that, right? So there were some deficiencies, some lacunae, which are as follows. No credit of CST, central sales tax, was available to manufacturers, traders and service providers. No credit of central tax like central excise duty, customs duty and service tax was available to traders. There were many rules, regulations, and somewhere either double taxation happened or these taxes slipped through the gap. That is, subsequently the traders or manufacturers, due to some rules, regulations, they weren't able to get a set off, as a result of which taxes added upon taxes and it resulted in increasing price of the goods to the ultimate consumer, goods or services to the ultimate consumer. Now no credit of state VAT was given to service providers. Problem relating to distinguishing between goods and services led to double taxation at times. Now in goods, in GST Act, there are several sections and schedules which have been dedicated solely to these cases where the line or demarcation between goods and services becomes difficult, right? You will learn it further, because there are schedule 1, 2 and especially in schedule 1 and 2, there are actually, you have been given various rules and regulations, and even in act which can be used to if in case of confusion, it can be used to differentiate or decide if a product falls under goods or services. Now you must be thinking that okay, these goods and services, there is no such difficulty, but imagine a case where suppose a person has given his land on rent to someone to be used as a parking lot. Now what will that be? Will it fall under service? Because that person, or not on rent, suppose it has been given on a lease and a long-term lease, right? So what will that be, whether it be goods or service? So these kind of cases have been clearly distinguished in schedules and sections of GST. So earlier tax regime, this was not the case, which often led to double taxation because people had to arbitrarily decide whether they wanted to treat such confusing items as goods or services, right? So then non-inclusion of several state or local levies such as entry tax, luxury tax, etc. in state VAT. Now we learned about deficiencies of earlier system. Now let's learn about benefits of GST. So benefits of GST can be understood in three facets. First is the benefit to state government and central government. Second is benefit to traders, and third is benefit to final consumers. So let's first understand benefit to central or state government. So first is unified common national market, which is GST aims to make India a common market with common tax rates and procedures and remove the economic barrier, thus paving way for an integrated economy at national level. So GST has, as I said earlier, GST is levied on goods or services on the basis of HSN, which is harmonized system of nomenclature in case of goods, and in case of services there is SAC, right? So for many products there is a common rate and procedures, because since there is only one tax, right, one nation one tax, so which was the one nation one tax was the tagline of GST, and the procedures are common. There are tax rates which are common, which have removed economic barrier. You don't have to understand many different kind of tax laws, and this has resulted in removal of economic barriers, thus paving way. Paving means making, so making way for an integrated economy at national level, because there are common tax rate, there are common procedures. People don't have to fill various kind of forms for complying with various kind of taxes. There are very common forms, common procedures. This has integrated the economy at national level. Boost to exports. The subsuming of major central and state tax and GST, complete and comprehensive set-off of input taxes on goods as well as services, would reduce the cost of locally manufactured goods and/or services in the international market, thus giving boost to exports. So why do you think is the export products of one country is preferred over another, or why is the export products of China is preferred over our, in some cases, our own domestic market products? Why is it so? It is because the Chinese products are cheaper, and people obviously go to that option where they have to shell out less money. So since GST has subsumed, we learned that list of various central and state taxes which GST has absorbed, which GST has completely eradicated, and as a result of it there is no double taxation, and traders and manufacturers are able, subject to some conditions, but more or less they are able to get a proper set off of input taxes on goods and services that they use in the production of that product or service. This has resulted in reduction in cost, because traders or manufacturers, since their money outflow is reducing, they will automatically reduce the price of their products or services, because they want to get a competitive edge, they want to compete in the market. And even in those cases where these kind of traders and manufacturers did not reduce the price of their product, or did not provide the benefit, or did not pass on the benefit of this set off to their consumers, national anti-profiteering provisions have also been provided, and a national anti-profiteering body has been set up to ensure that no trader or manufacturer has or enjoys unjust enrichment at the cost of their consumers. That is, any benefit due to the set off that they get, the manufacturers and traders get, they duly pass it on to their consumers, right? So of course this reduction in cost has boosted export, has given a boost to export. Then boost to Make in India. GST will help to create a unified national market for India, giving boost to foreign investment and Make in India campaign. Now how does GST boost Make in India? So since GST is about one nation, one tax, it has common rates, it has common procedures, these all benefits are interrelated. So ultimately, what they do is they have unified our national market, they have integrated the economy, Indian economy, and as a result of so much reduced procedures, and it has given boost to Make in India by attracting foreign investment. Then there is increase in revenue. So GST is expected to bring buoyancy to the government revenue by widening the tax base and improving the taxpayer compliance. Because of course, earlier a lot of, in case of indirect tax, many taxpayers used to grapple with a lot of taxes. In that case, both the cost of compliance was higher and people used to avoid getting into that system, that complex system of paying tax, of ensuring compliances. But now, since introduction of GST, there has been an increase in revenue and widening of tax base because due to these benefits that the GST has provided. Now let's understand benefits to trade to simpler tax regime. Of course, fewer rates with fewer exemptions will lead to simplification and uniformity, and anything which is uniform facilitates the transactions or the movements, ease of doing business. So GST will lead to reduction in compliance cost as multiple record keeping for a variety of taxes will not be needed. Therefore, lesser investment of resources and manpower in maintaining records is required. So this is very apparent and obvious benefit. Then benefits to consumers: reduction in prices of goods and services, elimination of double taxation, and cascading effect. Cascading effect is implementation of tax on tax. It is similar, is more or less double taxation and not getting set off for those taxes, right? So elimination of double taxation and cascading effect will reduce the cost of goods and all services for the consumers, and ultimately they will also have to shell out lesser money, so they will also benefit, right? So these benefits are more or less interconnected. Now let's understand these commodities which have been kept outside the purview of GST. So first we learn about that, and which has been given in our Article 366 sub-article 12A. These alcoholic liquor for human consumption, and these 5 petroleum products have also been kept out of the purview of GST, which are petroleum crude, motor spirit, high-speed diesel, natural gas, and aviation turbine fuel. So all these are petro products, and they have been kept out of GST. Now let's understand, earlier I mentioned a term dual GST. So now let's understand in detail what exactly is this dual system of GST. So dual GST has been implemented in India where the central and the state simultaneously levy GST on a common base. By common base I mean the basic amount on which these GST rate is charged. Suppose a product is of an amount, say the basic amount of a product is say 100 rupees, and CGST, and the rate of CGST and SGST is 9%. So on that 100 rupees, that is the common base, CGST of 9 rupees and SGST of 9 rupees will be levied, right? And if that product is subject to IGST according to supply, then IGST of 18 rupees will be levied on that, right? So central and in this way central and state simultaneously levy GST on a common base. A system of dual GST is required because both the central and state governments have been assigned the power to levy and collect taxes through appropriate legislation. So Article 246 provides this authority of law, as we read in introduction. Now, moreover, both levels of government have distinct responsibilities to fulfill according to division of power prescribed in Constitution, for which they require resources. So they have to provide infrastructure, they have to provide healthcare facilities, they have to provide this PD system, food to poor, then there are maybe various schemes like Manrega, etc. And these require money, right? So for fulfilling their responsibilities to their to the people, to the citizen, obviously money is required, obviously resources is required. So according to the division of power which has been specified in the Constitution of India, they require resources. Hence a dual system of GST has been implemented, which is in accordance with the constitutional requirement of fiscal federalism. Now, what do you mean by fiscal federalism? So, fiscal federalism is a term which was coined in 1950s, and if I remember correctly, the year was 1956. So, this fiscal federalism means the division of power to division of monetary power to various monetary powers as well as responsibility to various level of government. So that is what the fiscal federalism is a very wide term, and but in short, in a nutshell, that is what is fiscal federalism is about. Now let's understand about GST Council, which is the body which is responsible for implementation of GST. It is a constitutional authority constituted under Article 279A of the Constitution of India, and it was formed in September 2016. It is the first constitutional federal body vested with power to take all major decisions relating to GST. So all major decisions relating to GST, no, related to, I have enlisted here the major decisions like tax. The GST Council make recommendations to both central as well as the state government on the taxes such as surcharges to be subsumed in GST, goods and/or services that may be subjected or exempted from GST, the rate of GST, model GST laws, principles of levy, apportionment of IGST, etc., threshold limit or turnover for registration and GST, special provisions with respect to Northeast states, Jammu and Kashmir, Himachal Pradesh and Uttarakhand, etc. So we'll learn about these provision in further lectures, but as of now these are some areas where GST Council plays a very vital role and makes recommendation to GST state and central government. Now those 5, if you remember those 5 petro products that we discussed about earlier that have been kept out of purview of GST, that is also an area which GST Council will ultimately decide if it comes under purview, if those 5 products come under the purview of chargeability of GST in future. है ना? So these are those 5 petro products come under chargeability of GST. That will also be when that will happen, that will be decided by GST Council, right? Now the chairman of GST Council is the Minister of Finance, who is at present is Mrs. Nirmala Sitharaman. Then the Minister of States is also, who at present is Mr. Anurag Thakur. Then Minister of Finance Minister of various states are also in that council body. These are the members of GST Council. So this was all for today. This is enough for introduction of GST. Thank you.